Welcome back to another video. If you have been searching for the best indicator to trade gold with, or perhaps you have been looking for the best indicator that has the highest accuracy in predicting gold, then this video is for you. In this video, I will be showing you the only one indicator that works for every profitable trader trading gold out there. Also, I'll be showing you the best time frame to use when trading gold. Stay tuned and watch till the end. Welcome back. Let's look at stochastic oscillator with this powerful setting that most traders don't know and have probably not used. This particular setting makes stochastic oscillator so powerful that it picks every buy, sell, and reversal signal accurately. Okay, now let's go to the video as I show you how to get these settings. Now you head over to the trading view, go to the indicator section. You can see I have mine already by default. If you don't have your own, just type stochastic. So once you type stochastic, there are different types of stochastic that will come out. Look for the one that has only stochastic. Select that. Once you select that, it comes out to the chart. Now let's go to the settings and do some settings to the indicator. Now on the indicator, this is what we're going to do. I already have mine by default because I use this indicator very well. Now this is what I'm going to do. On the K percent length, you change it to 60, and on the K percent smoothing, change it to 1. On the D percent smoothing, also change it to 1. Then come over to the style. By default, you will see 80 and 20, 50 by default. Now this is what you're going to do. The upper band, you make it 90. The middle band, make it 50. And the lower band, make it 10. Okay, once your setting is like this, the upper band 90, middle band 50, lower band 10. Now your K percent length 60, K percent smoothing 1, K percent D percent smoothing 1. Once your setting is like this, you go ahead and click OK. Now look at it now. This is the new look of your oscillator. Now if you are using MetaTrader for your trading, now let's go over to the MetaTrader. You come to the MetaTrader, go to the insert, go to indicator. Under the indicator, come over to the oscillators. Okay, come over to the oscillators. Under the oscillator, select stochastic. Under the stochastic, you will see it K period, make it 60. K period 60. Sloping, make it 1. D period, make it 1. Okay, and once you are done, go over to the level. Now you can see by default it came with 80, 20. So what we're going to do, we're going to first of all add another level, then change this level to 10, which is the lower band, change the upper band to 90, and another, we have added a new band, which is the 50. Okay, now you can determine the color, any color of your choice. Let's use black for this. Any color of your choice, the thickness of the line, depending on what you want. Now you can see it's plotted. Now the indicator will look like this: the 90% level, the 50% level, and the 10% level. Okay, now let's look at how to use this properly. Now I'm a day trader. I don't know the type of trader that you are. You might be a scalping trader, you might be a swing trader, you might be a day trader like me, or a position trader. Now one unique thing about this strategy is that it fits in every trading style that is available, and it works on all the currency pairs as well. You can use it on your FX, you can use it on also on this. And the sweet thing about it also is that for those of us that trade synthetic indices on the RIVE, you can also, it works perfectly on the RIVE. This indicator is best traded using either the 15 minutes or the 5 minutes. It doesn't mean that it doesn't work on any other time frame. It does. It works on every other time frame. But for me, I prefer to use it either on 15 minutes or 5 minutes. Now look at it on the 5 minutes, you see. Now look at it on 15 minutes time frame, look at it on 1 hour time frame, and look at it on 30 minutes time frame. You discover that it works across all the time frame depending on your choice. Okay. Now before I proceed, I want you to know that the 90 here represents the overbought level of this market, and the 10% represent the oversold level of this market. Okay, the 50 represent the equilibrium, the balance of the market. Now let's go. How does this settings or this indicator works? once the signal line crosses above 90, it gives you a signal that the market has entered the overbought situation or the overbought state. Okay, and at that state of the market being overbought, there is a tendency that the sellers will take over the market and push down the market. Okay, it's just a signal for you as a trader. So what you do, just like I said, patience is the key. Okay, now you have to wait for the same signal line to cross below the 90% again. Once it crosses below the 90%, it gives you a signal that the sellers has taken the market. Now, what do I advise? I will advise you to wait for a retest. Okay, once the market has retested this 90 again at this position, at this particular position here, then I can consider entering the market at this point. Let's look at this scenario again, then before we go back to the chart. If you look at it here, you discover that the market, number one, has crossed below the oversold level, which is the 10% level. Now, it is giving me a signal that this market is oversold. And at this oversold position, that the buyers will soon take over the market. Okay. So what do I do? Do I enter immediately like other traders will do? No. I have to wait to make sure that the buyers has really taken over the market. Now, if you look at it here now, the buyers took over the market, pushed it up. Now, they pushed it above the 10%, which is the overbought level. They pushed it above. Should I still enter here? No. You are pushing it above is a second signal that you must look out for that tells you that truly the buyers has taken over the market. Now, when should I now enter the market? I must wait for the market to come back and retest the oversold level, which is the 10% level. Once the market has retested it, then I can consider entering my buy. Now, let's go to the chart and we look at how this thing plays out in the chart. I want you to observe this. On this day, you see the market here crossed above the 90% level, which is the overbought level. Now, it has entered the overbought level. Now, what is it giving me a signal? That the sellers will soon pick the market from that level. If you look at it here, you discover that the sellers pushed this market down. Okay, the sellers did what? Pushed the market down. And that is the confirmation criteria number 2 met. The market came down at this particular point and retested the 90% level. Okay, it came down at this particular point and retested what? The 90% level. So at this particular point of retest is where I will consider entering my trade. After this particular level, I put in my sell, my short position. Now let me do my settings. My profit, just like I said, I like targeting 1:3. My stop loss. Okay. Now I like targeting 1:3. My stop loss is plotted. You can see 1:3. Let's look at the same scenario. The same scenario played again here. Look at it again here now. It came down, crossed the oversold. The buyers took it up. A confirmation, a retest the market. And at this retest point is where I'll be looking for my entry. Now, what do I do here? I put my buy because it shows that the buyers, it really confirmed that the buyers has taken over the market. From here now, I plot what? My buy. Now, depending on your hunger for profit, me, I like 1:3. I pick my own 1:3. Okay, plotted, you see? Profit smashed. With these illustrations now, I want you to go back and backtest it on your own before you implement it. Now, still coming to the chart, sometimes you will notice that the stochastic is consolidating, but on the chart, you will notice that the chart is trending. Now, for example, you notice that this chart now is in an uptrend, okay? But on the stochastic, it's consolidating. Now, that is where the 50% level of the stochastic comes in play, okay? Now, whenever the stochastic is consolidating above the 50% level, now that trend will continue to be in an uptrend, even though that the stochastic is consolidating. Now, look at this again. Look at the bearish scenario. You notice the chart here is on a bearish movement. Okay, now look at what the stochastic has been doing, consolidating below 50% level. As long as the signal line of the stochastic indicator is still consolidating below this 50% level, the market will continue to be in a downtrend until it breaks above the 50. Okay, so whenever you see the signal level of the stochastic consolidating on a particular place, now what you have to do as a trader is to look out. Is it above the 50 or below the 50? If it is above the 50, that market will continue to be in an uptrend unless there's a crossover. Then if it is below the 50, that market will continue to be in a downtrend unless there is a crossover. I believe you got value from this video. If you have any question or any contribution, feel free to drop it in the comment section and I'll be attending to it in my next video. Before you go, don't forget to hit the subscription button, turn on the notification bell, like and share this video so that others will also benefit from it. Have a peaceful trading day. Bye.